Hey there, good afternoon, everybody. Christopher Inks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Friday, May 14th, almost halfway through the month. Taxes due this weekend if you're in the U.S., or hey, do like some of the rest of us and just, file for an extension. But anyway, like I said, it's Friday, May 14th, 2021, and I am streaming here from beautiful Bernie, Texas. It looks like we had a day of sun yesterday, and again, we're back to the overcast and potential rain and severe weather and all that fun stuff we've had here for the past week or two. Good times, good times. But hopefully y'all are doing all right. Lots of news going on in the market right now, and it seems like again most people are just emotionally tied, man, to Bitcoin price, and so you've got the news of Tesla that's no longer going to accept Bitcoin because of the environmental impact. we won't talk about them lithium mines though, right? Or where most of that electricity that you're getting to make your car go, your electric car go, where all that is coming from, right? No, of course not. We'll just talk about this other thing here. We just found out that Square as well has decided they're not buying Bitcoin for their treasury anymore. They noted a $20 million loss in the last quarter. And for those of you that don't understand, it's a business thing. You gotta post quarterlies, and it doesn't matter what your potential whatever is over time, especially if you're a public company that has shareholders, because if you take that loss, I mean, that goes against your bottom line there, and it makes people not want to be with you. So they either leave if they are with you, or they just don't join you if they're not with you. So I've talked about this before, guys. When you're a public company and you're taking on Bitcoin and price drops, I mean that ends up giving you a real effect as far as does anybody want to be a part of what you do? And so, these are things that the companies have to keep in mind. And most of y'all, don't understand this. And so it just leads to some real misunderstanding of everything overall. But, again, I try to keep y'all up to date and let you know what's up with all that. Again, guys, I love Bitcoin. I think it's great. And I've got a lot of hope for it overall. But, again, we've got to be real about what's going on and, when it's going on and whatnot. A lot of y'all believe that, companies should hold on to Bitcoin even if it dumps 50% or something. And that just doesn't make a lot of sense, especially not from a public company standpoint or somebody that's invested, hundreds of millions into it or something. You book your profits and you wait for it to drop lower and then you buy in lower. I mean, there's no reason to hold through a downturn at all. And we've had a bit of one. Dropping from 65. So we'll take a look at the charts today again and go over all that and see where we're at. The recent drop a couple of days ago caught people off guard. If you guys have been paying attention, even if you're not with us in Discord, if you're at least watching these live streams, it shouldn't have caught you off guard either. Gave you well thought out ideas of what we'd be looking at in terms of Elliott Wave counts and where those invalidation levels are, and if they broke through, what the next count would be and how they would look. So I mean, you've basically had a roadmap along the way to keep you safe. So it shouldn't have been anybody surprised, with price dropping down and upset and all that kind of stuff. So a lot to talk about today, and we'll see how much of it we can get through. Who's here already? Let's see here. Claudio, what's going on, man? Good to see you. Blaze checking in. Hank's here as well. The French Bull, Spiral Architect, Data, Nevlusian, Josh Johnson. What's going on, buddy? LXT checking in. Onyx King. LXT saying Ethereum is pumpy. Yes, again, everybody's still kind of jumping in on that. And here's the thing, guys. I often talk about what's going on with the markets, and I talk about the frothiness and, the FOMO in and whatnot. And what I don't think you understand in, maybe, because you're new traders, it's okay to get into stuff like that as long as you understand what you're doing. Oftentimes for professionals like myself and others, these FOMO markets are fantastic. They're great because it's easy money. We know what retail's going to do. We look at where they're going. We know what they're going to do generally, as far as FOMO goes in and whatnot. And we get in. But the best part is we know it doesn't go up forever. We know that this isn't some new paradigm. We know it's not going to be different this time. And so we can make money and get out. The problem is that retail doesn't understand that. Retail thinks all those other things that are never historically true. So don't think that you couldn't get in on Doge or that you couldn't get in on Ethereum or that you can't, all these things that are pumping and popping and doing these things, Shibu and all that kind of stuff. But recognize that, especially things like Doge and Shibu and whatever, it's not that they're going to become these global reserves or anything like that. I mean, they are what they are, guys. Doge is a meme coin. Shibu is probably junk at the end of the day. But that doesn't mean you can't make money with them when they're popping. Just, it's all in how do you look at that overall. That's what it's all about. Let me see here. Hey there, Aramis. Good Friday, my friend. Good to see you here. Let me see here. Hank says more movement equals more news, not the other way around. Hey there, Wind. What's going on, buddy? Let's see here. Hank says he's slightly surprised that Uncle Jack, Jack Dorsey there of Squared and Twitter fame, did not insure his Bitcoin with a nice CME play. I don't know what he did personally. Remember, this is just what they were buying for their corporate treasury. So, I don't know. We don't know the whole story. All we know, and if you're upset about that, guys, about the article, remember that there was a interview they did with Square's financial person there, and that's what she said. This is what she said. This isn't somebody in the article just making things up or putting in their own ideas of what's going on or whatever. That's what she said. So, no, not the joke. That's literally what she said. So it's no secondary, what may be going on or a bad take on it. It's exactly what she said, But she also said really that they don't see themselves buying anymore at this time. Again, guys, I've talked about it before, when price is moving down, as it gets toward a bottom, your bigger guys are going to come in and they'll buy again. But many times retail just thinks they have to keep buying. That's all there is to it to push it up. But the reality is that isn't what's going to happen. So yeah, you got to be careful with that, guys. Let's see here. I'm Deuce. What's up? Jeff D is here. ARM is here. What's up? Will, what's going on? He says, what do you say? New here, but I'm glad to be here. Hey, we're glad to have you here too, Will. Hopefully you'll continue to come back. We talk about a lot of everything, or a little bit of everything, or a lot of a little bit. But at the end of the day, there's always education. It's all about helping you become better traders, understanding the greater ideal of what trading is, not the nonsense that new traders get into and what they think when they first come in. So we help you try to become a more responsible, more careful, a more well-thought trader overall. And then we talk about markets and stuff along the way. Hey there, Mike. Good to see you, man. Let's see, Amdu said he caught that drop on the 15 with the 15 times leverage while he was asleep. Great trade to wake up to. And yes, take profit and stop loss were said prior. Yeah, that's the important thing, guys. When you get into a trade, make sure you're not just jumping in. Unfortunately, that's what most of retail does, right? When you're new to trading, you basically just jump in and hope that price goes your way, right? You don't really know what's going on. You're just hoping. Properly trading means you have a reason for believing price is going to do whatever you think it's going to do, and then you understand at what point it's invalidated and where you plan to take profit. And so all that's already figured out and set up before you ever enter the trade. If you try to do that other stuff after you enter the trade, you're much more likely going to be emotional, and that means you're not going to put the proper stop loss or the proper take profit on there. Because you're in the trade and you'll think, oh man, it's got to turn around. It'll turn around. I'll just let it go a little bit further. It'll turn around. Or you think, oh my God, it's going to keep going up. It's going to keep up. And I'll hold off. I'll take it a little bit higher up. And in either case, ends up usually either losing you a lot of money or losing you a lot of profit. So yeah. Hey there, TV Canal. Good to see you, man. Onyx King checking in. Yeah, it's all about the global reserves, right? I seriously saw somebody kind of talking about Dogecoin becoming the worldwide global reserve currency. People. Let me see here. Chemo, what's up? Says every trader has to go through the same learning and acceptance process. What is really unfortunate is the newer traders coming in the bull market and overconfident in their skills. And that happens every bull market, guys. Again, I told you, I've been doing this for, 25 years now? So I've seen multiple bull and bear markets in equities and, and everything else. And, it's always the same story, guys. Nothing ever changes. It's always the same thing. And everybody seems to think right now with crypto that they got in early, so they're going to flip over all the elites, and they're going to decentralize power and all this. Guys, it's such a bunch of nonsense. Why? Because first of all, as retail, you aren't coordinated. Y'all, you own a little bit, you own a little bit, you own a little bit. These bigger guys, when they get in, they're going to get a big slice of that pie, and it's going to get bigger, and they're going to control more, which means they can control more at one time. Which then just wipes out a whole bunch of little guys. And so even if you got in before the big guys got in, the odds are they're still going to win and you're going to lose. There's going to be a few people who make some money. Yeah. But don't for a second think you're smarter or better than the guys that are doing this for generations. My dad's dad did it, and my dad's dad did it, and my dad did it. Now I'm doing it. This is generations of pedigree, guys. These are institutions that have built up over 100 years to do this exact thing, to continue to get bigger and wealthier. Stop thinking you're so much smarter and better than that. Because what's going to happen is you're going to make a little money for a bit, and it's money that you should go ahead and just take out and, take profit on. And you won't, and you're going to get caught up in the chop that they're going to cause. This is the reality of it, guys. So don't be afraid to take profit along the way, because, if the big guys are really interested in this, they're going to wipe most of y'all out. It's just the way it is. And you don't want to be a part of that. I know you don't want to hear that. I don't like saying it, but it's truth, man. And you should be more interested in truth than what, makes your heart sing, right? Anyway, So anyway, hey guys, you can join us here at howtotradetowin.com. You'll get a lot more of my thoughts throughout the week, answering, your questions and other people's questions. And of course, Tier 3 is where it's at. We're closing in on 100 hours of video education now for Tier 3. We've got two weekly streams, one on Wednesday, which are tips, tricks, and techniques, where we'll give you, even if you've never traded a day in your life, we'll teach you how to trade immediately with rules, rules-based strategies that tell you, listen, you enter at this point, your stop loss goes here, and your take profit goes there. And you don't have to know what's going on. You just have to know the rules. While you're learning more about the overall market. Thursdays, we've got Elliott Wave stream, which we take an hour and we go over some Elliott Wave and some current charts and kind of discuss all those things that you learn in Elliott Wave and kind of apply it there and show you why things may or may not work out there and what I'm looking at. If I'm looking at a chart and I say, well, here's what I think the count may be, but then showing you my alternates and why I'm looking at those alternates and how they would play out so that you understand how to really apply it successfully. And then, like I said here, sometime within the next few weeks, we're going to have one more stream as well, on weekly stream for the Tier 3, which is going to be about Wyckoff, and basically to be the same thing as we do with Elliott Wave, but just with Wyckoff, which is, all about price action and volume analysis. So great stuff going on there. And, of course, chart requests, chart critiques, all that stuff. The community is pretty freaking great, man. So we'd love to have you there. Join us, howtotradetowin.com, all right? Let's see here. Let me see. So here's where we're at with... oh, wait a minute. You know what? Before I do this real quick here, there was one thing. Elliott Wave International, sometimes I give you some stuff that they've got going on, and they give me special codes to give you guys. Make sure that you guys are jumping in here. Let me see here. Where did I do it? Where did I put it? Ah, right here. So this is the code right here, or that's the link right there. You can join that link and then use the code TXWC. There's the code when you go to that page there. And what you're going to get is the most recent Elliott Wave Theorist, which is a monthly thing that Bob Prechter puts out for Elliott Wave International. And this one, gives his outlook for three markets: stocks, commodities, and interest rates. And all three are following his projections. It really is a great source of information, guys. So if you don't already get it, go ahead and jump in there and get the free issue of the latest one. And it'll help you, if anything, at least get a bigger understanding of what's going on in the markets overall. So free alpha, man. It's never a bad thing, right? All right, so where are we at? Well, Bitcoin. So we've been talking about as we fall through, again, this is what I was talking about last week, or I guess, what was it, Tuesday. We were talking about the swing lows and how that could play out as far as the count goes. And so we're watching this swing low, and if we went through that, it would have invalidated what we were looking at and created a different count, which I talked about. And then if we drop through this, it creates a different count. And so we've done all that. And so now we're at this point in Discord here where we've got this as an A. So we're still looking at this potentially as a triangle. Potentially as a triangle. We'll talk about the second idea in a minute here. But right now, while it remains above this wave A swing low here, which is 43,020 on Kraken, while it remains above that, we've got an ABC down for A, ABC up for B, and then potentially an A, B, and a C here for C. Okay? Which means we'll get an ABC up here for D, and then an ABC for E, and then we'll fire on up to 70,000 plus. Okay? Now, what I talked to Discord here is 2 days ago, we had this drop here. Kind of in line with what happened with the NASDAQ and stock market and everything there. They all had their drop, and then Bitcoin has its drop, and not just Bitcoin, BCH, Ethereum, Litecoin, everybody pretty much, right? And so when we happened here, I've been talking to Discord saying, okay, either we're at a bottom or we've potentially got this triangle thing going on in one more lower low. But what we have here this morning now is this breakout here above what would be wave A. Since this has broken out about what would be wave A here, this is no longer a valid triangle. So, hey, looks like the bottom's in, guys, right? Looks like the bottom is in now, down there toward that, from 2 days ago, this swing low here at about 45,000 here on Kraken. So, with that being down there, then we'd look at this being here as a 1 and a 2. So, again, I'm looking at this now as a 1, 2 here. Or potentially an A, B, and working on a C here. All right? So, it is possible that this is A, this is B, and then we're working on C here of D. Or again, this could be a 1, 2. Now, my thought is, the thing is, if this is a 1, 2, here's the problem or the real issue I have with it. If this is 1 and this is 2, well, that gives us a 3 up here at 57,327 and a 5 up here at 59,704. Now, your 5 is fine. It's still well below wave B here, or decently above. But you would have to do, an A there, a B on the pullback, and then C up. So, I guess it's still possible. But for this triangle to remain valid, price has to stay below the swing high up here at 64,900 or so. If you break out above that, this isn't a triangle. It's invalidated. Okay? So, I don't know. That's kind of a big move there. But potentially, we can have that. We can have a little bit deeper, like I said, a little bit deeper pull back here and then move up. So right now, if it's wave 3, it'll be up here around 57,327 should be wave 3 here. 1, 2, 3, which means A should maybe end up here around 59,760. But again, you'd be looking at an A and then a B. You'd have to have a kind of a deep pullback for a B here, and then a C, something like this maybe, to get your wave D, if that's what's going to be. Or, again, this is an A, this is a B, as we have this here, maybe. And you just have some overextended C, maybe, that takes you up, just above this kind of area over here. That's still a possibility. But either way, the idea is that it should continue higher. At least to initial target of 53,392 here, and a secondary target up here of 57,327. So now that we've got this breakout here. Now the only thing that would change that, obviously, is if price comes on back down here and drops below this swing low over here. Which is at 47,022. It is possible, we've got an ABC down and potentially an ABC up, so it is possible that we have a flat correction building here for wave 2. Let's see here. And so it looked like that. By the way, as I told Discord, when we bounced up here, I said I wouldn't, don't be surprised to see price pull back about halfway or so, and so it almost did that there. But now we've got potentially wave 2 doing something like this. Kind of get rid of that there. So you may see this again as an ABC down for an A, ABC up as a B, and then 1, 2, 3, 4, 5 getting down here for C. So don't be surprised if you see this happening. Especially if we're looking at the 1 hour right now, we're pretty well overbought. It's definitely possible. We've got volume decreasing here on this advance, which means less and less interest as it's rising higher. So we'll see if we get this rejection here and we drop below, back below the S2 pivot on the 1 hour here. And that might say, hey, we're probably coming back in 5 waves down to here. But if we do, again, you get down around this area and then it should take off and head up into wave 3. So if it doesn't continue up, it comes back down here, it's probably just a flat working its way up there. Hey there, Bill. Good to see you, man. Let's see here. Let me see. Let's see. Hank says he's been looking at it with Todd, and we guess it could be a spring in reaccumulation. Not guaranteed, but it works with the volume profile as well. Can even go down one more push. New climb on low. Yeah. Possibly. Crypto Raid, you watched Robert Prechter's video? That link I had over there in Discord? Might need to pick out a grass hut for my family to live in for a few decades. Now, here's the thing, guys. Here's the thing. The great thing about trading is, even if the markets tank, even if they go down, if you understand that, you know what's going on, and you understand the options available to you as a trader, you can at the least protect your wealth where it sits right now, and even better yet, make a ton of money on that drop, guys. And then, use that as the basis to make a killing on the move back up. So, if the markets go down or whatever, it's not that everything's over. It's more opportunity for you. You just got to, I guess that's the difference between being a trader, and I'm not speaking to you personally, Crypto Raid, but just in general, with a lot of comments that I get, it's the difference between being a trader and being, just some new retail that's FOMOing in at the top. It's the ability to look at that and go, okay, now I can make some money this way. So yeah, exactly. Up or down are just directions. That's right. You can make money either way. Hey there, Pavel, checking in from Prague. Good to see you, man. What's your opinion about MACD and RSI today? It depends on what you're talking about. You have to tell me what you're talking about. Let's see here. Can I break down what a triangle is real quick? Yeah. So this Elliott Wave triangle is what we're looking at. And an Elliott Wave triangle, a symmetrical triangle to be exact. And that's going to have 5 waves, and it's going to go A, B, C, D, E. And each one of these waves, A, C, and E have to get progressively closer. The idea is that it's going to contract. And your B and your D, are going to kind of move up here. And so if you're, getting above wave A, breaking out, well, it's not contracting. If you come up, go A down to B, and then you go above A, it's not contracting. So that symmetrical triangle is no longer valid. Now, there's other ideas of other triangles you can get. You can get an expanding triangle, which is really rare, and most often will never be the case. But, your expanding triangle would look something like this. Looks more like a megaphone pattern. And so each one is going to expand rather than contract. So you get this A, B, C, D, E. But that's a very rare pattern. Very rare that it happens. Very rare to find it. So we usually don't think about it a whole lot. Symmetrical triangles are definitely where it's at. Most of the time, where it contracts like that. And that's the next to the last move. So, if you're coming up off the bottom here and you go A, B, C, D, E, well, then you have one more move lower, and that's your final move. This always comes right before the final move, the triangle does. So, Elliott Wave triangle if done properly. Yeah. Let me see here. TV Canal, it'll be a bit, man, if I can get to that, all right? Let me get through what I've got going on here today, and then if you can remind me here toward the end, I'll jump on that and check it out for you. Sure. Yeah, Crypto Raid, man, we love having you there, buddy. You're one of them ones that have been with us forever and a day. I keep telling people we've got members that have been with us basically from the beginning. I don't think they ever really believe us. But, you can tell them, how we've expanded and everything now you get compared to what you did when we first started and everything else. It's crazy. Always trying to add more. So anyway, again, possibly looking at this being a flat correction here. But the triangle's out because it did not. Let me further there. And I like this a lot better. By the way, something I've been discussing with Discord for the past few days is the fact that wave A swing low is right here, and we're pretty close to it. So if that triangle worked out, the pattern target took it, almost to it. I don't like getting that close to an invalidation level, honestly. But, there was the possibility it could have dropped through. And if it dropped through, well, then the triangle was no longer valid because you pushed through wave A. And then it opens up other possibilities, right? So if we zoom out, the other possibility, as I've been talking about, is this ending diagonal idea here, right? And so we don't really think about this unless we violate 43,020. If price ends up just dropping down below 43,020, this becomes the dominant idea, the dominant pattern. And if this is, then your initial target when you have an ending diagonal, which is what this is, ending diagonal being an ascending wedge here at the end of the run, A, B, 1, 2, 3, 4, 5. So your initial target is going to be at the beginning of that ending diagonal. So that's right here in the low 30s. So if we lose 43,020, my initial thought is we're probably heading down to the low 30s here, based on the idea of this being that ending diagonal. And if we do that, then that would suggest to me that the macro 3 is up here, and we're working on that macro 4 to finish it out. And then we'll have that macro 5 up. But notice I didn't say, it's going to die off here and, and you should get ready for $1,000 or anything. No. I still think, it's always possible that this could be the top of the top, but right now, until it proves it is, I think right now we still look at this as a 3. Or potentially this over here is a 3, and we've got a macro large wave 4 triangle going on before we pop up. Something like that for wave 5. Or even, and I'm a little iffy about this, the other idea is that this triangle is wave 4 of the macro 3. So basically you'll get this triangle here, A, B, C, D, E, and then you get this move up here to the mid 70s or so for for the macro wave 3. And then you'll have your macro wave 4, and then you'll have your macro wave 5. But that macro wave 4, then, if this triangle is just the interior 4, this thing's been going on since February 21st. That's almost 3 months we've been in this. It'll probably be a little bit over 3 months by the time it breaks out, if it continues on with the triangle. And with that, that larger wave 4, shouldn't take less time. It should take longer time in general, because you're talking about an exterior wave 4 versus an interior. Interior should be a shorter time period, right? So that's got me kind of iffy. Other things we can look at here, I've made note multiple times about the fact that we're just hovering around the pivot. That's never necessarily a good thing. You got to be cautious if price is just hovering around the pivot like this, because then you get stuff like this. You get the drop there. But realistically, the S1 pivot's holding up support here. Now, you can look right here from this 25th of April swing low to the 13th of May swing low here. And there's basically a local kind of bullish SFP thing going on here, especially with the movement up today kind of confirming it. So, a bullish spring failure pattern kind of going on here. And basically what that means is you've got this low over here, and then you wick down below that low and close back up above it, and then you get follow through heading up. Now, as far as the daily time frame goes, it's not quite a month. You usually want to find them longer. But I'm not willing to say that that isn't it right there. So that's kind of where we're at the moment here. So potentially reversal signal coming off a bullish SFP, shorter term, less than a month difference there between the two lows. Then we kind of head on up here. You can see that the volume's heavy at the bottom. You can see there's good demand wick. So, again, this kind of doji with the long lower wick here, potential reversal, just a pause. You need to see some confirmation like we're getting right now, where you close up for the day that kind of says, okay, it looks like we're confirming that this is actually a reversal here. Otherwise, it could just be a pause here before further downside. So, we're not out of the woods yet. Definitely want to make it up higher there, but it looks decent on the daily at the moment. Again, the one thing that I've said that I don't really care for is this is all sideways here. And, you've got your big volume here. But after that, your volume for your low is down here, and then the volume kind of expands here. Now, these are your volume spikes that are really expanding. You can look at your average volume. It's dropping here. So with that average volume kind of dropping, the fact that the spikes are greater doesn't concern me as much as it normally would. If overall volume average was kind of rising and you got these strong wicks there, it might be saying something different. We'll have to see how this plays out at the moment. Let me see here. Sorry, let me get a drink here real quick, guys. Let's see here. What's going on, Bill? He says, I've been here with TWC since the dinosaurs walked the earth with you, Chris. Yeah, Bill's been around forever and a day as well. Love having you guys here, man. I think it really just kind of helps out with really just making us what we are. The community of traders we have in there is so great. And not everybody talks. There's really a core group of people that discuss a lot, but they discuss well, and they're all polite, and it's so great. And if you want to discuss things and you're new, it's easy to do it. Nobody ever gives you a hard time about it. They help you understand where you might be, where they think, something that you're looking at might be, you might be misconstruing, or you may be looking at it wrong. It's just so much help in there. Great people, man. Let me see here. So Jeff is talking about the base effect in CPI. We talked about that recently, which was that huge, the CPI was expected to be a 3.6% increase. It was 4.2, which jolted the markets a bit earlier this week. And I had talked at the time about the fact that that's, based on, where we were last year during this time because of the pandemic, which it was abnormally low at that time. So you've got that abnormally low to where we are now, which gives us what appears to be just this huge CPI increase. But really, it's more of an anomaly in the model, because the model is, historical, and that was such an anomaly last year as far as how low it went. So Jeff's talking about here that we're talking about the base effect with the CPI there. He says, we'll fade away looking at the year-over-year percentage increase of the CPI from a year ago. And he's talking about June and July. He said, which recently moved the interest rate up a bit because of the negative supply shock paired with the base effect. This is also still negative credit growth year-over-year, monthly. Yeah, exactly. Same thing I've been talking about. Lack of demand in loans and whatnot overall. Remember, guys, when we talk about, this whole idea of inflation and deflation, I think most people are so confused about because they don't really understand it. And part of it comes from the government. Inflation, if understood correctly, is the growth or contraction of the monetary supply. Okay? But people talk about inflation prices, price inflation. Price inflation is not a thing. No, it's not a thing. You don't get more prices or less prices. Your price just increases or decreases. Inflation and deflation are the adding or subtracting of available dollars in the monetary supply, right? But even beyond that, even though that itself is not an easy thing to understand, because how does the money get there? Where does the money go? Well, via QE, the money basically goes through your primary dealers, and that's how it gets into assets, which then raises asset prices. And so if asset prices are rising, then that can rise commodity prices, right? As demand grows on that. And so then you get things like gold like copper and lumber and corn and whatnot shooting through the roof, right? So that rise in asset prices, because of the way in which QE is put out there, leads to a rise in your regular prices. But the fact is, nobody's going out there and getting more dollars. They're not. The banks, the lending criteria is really tightened up a lot on the banks. So the government says, hey, listen, banks, here's all this extra money in our global, in our Fed Reserve, so that you can make these loans. Now go make loans. And the banks are like, I don't think so, man. I don't want to get caught on this nonsense, because if it goes down, I'm going to have to suck it up and eat those losses. And so instead of loosening their credit policies, they've been tightening it, right? And so when you guys think of inflation, what you should be thinking about is new dollar creation, which is done via banks, via fractional reserve banking, right? Not these little sneaky ways that the Fed is trying to move money in via QE, because that just, again, goes to assets, which then, it raises asset prices, which they shouldn't be. That's why we got these record number of zombie companies right now. And that just works on increasing prices. But prices themselves aren't increasing because money's coming in the way you think it is. And so not only that, but we have this huge savings rate, which last year spiked to the highest ever at over 35% or something, household personal savings rate, which in itself is disinflationary, at least, if not deflationary, because people are sticking their money in the banks and they're not doing anything with it. So you can print all the dollars you want in the world, guys, but if those dollars are not circulating in the economy, they're just sitting in the bank, it has no net effect on your prices. So if your prices are rising, but more and more money is just sitting in the bank, then that's a result of that asset inflation. It's not a result of dollars actually being used and spent and created. By the way, we've also had people paying off their loans and paying off their debts and whatever, record speeds, whatever here for the last year. And that is deflationary, because just as when banks put out loans, they're creating new dollars, which is inflationary. That's the inflationary creation that you should be looking for. When you pay off debt and bring it back in, those dollars are getting chopped back up. So you're taking dollars out of the system. Again, the same way as if you just stick them in the bank and it sits there, except in a more permanent way. So I think there's a lot of misunderstanding about, what inflation and deflation are and how they affect and whatever. How asset inflation affects pricing via QE, and whatnot going on with that. It's such a convoluted system, and it's become more convoluted as the Fed has, the Fed cannot directly provide money. It has to provide the money to the government, basically, right? But they've kind of worked a way around that with the creation of these special investment vehicles over the last year. Are they really constitutional or not? I don't know. They haven't actually been tested in court yet. But I can see the argument where they aren't. They're just a smoke and mirrors type of way of saying, oh, we're not really putting money out there, but they are directly that way, But but it can only get into, again, the asset side of it, which affects your asset prices, which is why you end up having this huge bull run here over the last 10 years in the stock market. So yeah, a lot of information out there that I don't think a lot of people really understand. Let's see here. Oh, I'm kind of catching. Yeah, everything's transitory. Everything's temporary, right? Yeah, depending on your time frame, anything can be transitory. Fed's favorite word right now. Remember, guys, I told you before, the biggest thing the Fed does is use its mouth. It tries to say things in a way that causes you to do the things that it wants you to do so that they get the results that they're trying to look for in the economy. So when they want to be so at times they're going to be really wishy-washy about it. They're going to use words like transitory. It never ceases to amaze me. Somebody needs to put out a book on Fed speak sometime. Maybe I'll do that. Make $1 million, it'll be a bestseller, right? Let me see here. So anyway, again, looking here with Bitcoin, we've got this other possibility, but only if we get the drop here below 43,020. In that case, initially, I'm going to think we're probably headed down here toward these low 30s. As this being an ending diagonal here. That's what we're going to look there. But as long as we're above that 43,020, I think our primary is going to be this triangle idea here that we've got going on, right? So A down there, B up here, C down here. We'll get D up and then E down, which means, if this triangle plays out, then we're probably still going sideways into June. I know you guys are like, really? But just know that there's if this continues playing like this, there is an end to it coming, and that'll be when you'll want to be in. But of course, we're going to continue watching this as it does, heading up through all that. All right. So let me see here. So we get with that, right? So then we go, okay, well, what's going on with Doge? So if you guys have been following along, my target was like around 88 cents, I believe is what it was. And so the newest update to the chart here shows that we've potentially got a target up there of just about $1. 98.88 is what it looks like. Now this is based on what we're doing right here. So this comes as a 1, 2, 3, 4, and then we've got this wave 5 kind of kicking in here as a 1, 2, and then 1, 2, 3, 4, 5 gives us a 3, 4 on this pullback, which is potentially done here. It looks like it should be done, working on a 5 up. In terms of volume, the volume seems to agree. You've got your low volume at wave 1, your largest volume at wave 3, and then volume drops off for wave 5. That's generally what we expect with Elliott Wave. Your biggest volume comes right there in your wave 3, usually wave 3 of 3. So again, looking at potentially that dollar target right now. I think that's probably where we're headed. It has nothing to do with what's his face, Elon, and his little Doge tweets. But everybody's going to believe it is. As I continue to tell you guys, news and price action happen all the time, all day long, every day. We just choose to associate it at certain times. But either news moves price or it doesn't. It moves price sometimes. Or the same news thing moves price the same way sometimes, and other times a different way. Again, either news moves price or it doesn't. And, generally it doesn't. We just associate it with it. Often these news events sometimes can be the catalyst that gets something going, but price has already been decided it's going in that direction, if you understand Elliott Wave. So again, this whole idea that, if you're chasing news, guys, you're already behind. The goal as a trader should be to be in before the news. And we are often in before the news at TWC, which is why a lot of our members have made a lot of money over the last year. Even in spite of my overall thoughts of what's going on, we still trade day to day what's going on as it is. My overall thoughts are things that could work out over some expanded period of time. But day to day, we still trade. We trade with the direction of what's going on. And that, I don't think enough people understand that either. They assume when you say something that it has to happen tomorrow or yesterday. And if it doesn't, then, you don't know what you're talking about. But again, this is just, retail nonsense that comes in, guys. It's people. Most retail comes in and then they think they know more than they do just because they can get into the market. People talk about politics, or they talk about religion, or they talk about trading. Because they're all things that you don't actually have to be qualified to talk about. So people assume that their opinions that they haven't really thought through hold some weight. And guys, I'm going to be honest with you. Your opinions about government, your opinions about religion, and your opinions about the markets really don't hold much weight unless you've actually done some serious research and study on it. And that doesn't just mean one way of it. That means competing things as well. Again, I don't say that to be, disrespectful to anybody in their thoughts on religion or politics or whatever, but you've got to be honest with the way things are. But most people aren't, and they don't have the ability to. They refuse to be such, which is why you end up losing out a lot in life, and especially in the markets. There's not enough humility in the markets, guys. Everybody's an expert in a bull market, right? Everybody's an expert. Most of these yahoos you see out here on Twitter right now weren't around during the last bear market. They all of a sudden pop up. Oh God, and not even so much crypto Twitter, but gosh, TikTok investors. Oh my gosh, Robinhood, Wall Street bets. Oh my gosh, most of these just aren't worth wasting your time even looking at, guys. Everybody's an expert in a bull market. Price generally goes up. If you buy and hold, it's probably going to go up. But then everybody claims how smart they are, right? But none of them are here during the bull market, but bear markets. During the bear markets, they all disappear. Very few of us are actually still here, time in and time out. So yeah. So, just because somebody's got a large following, guys, doesn't mean that they're necessarily worth following or that they're necessarily correct or anything like that. That's just a warning there for you, in case, you are new. I know you don't know me from anybody else out there, but if you come back here consistently, I promise you'll see that, I've got your best interest at heart. I'm not going to blow smoke up your rear end. I'm going to talk about the possibilities that you may not want to hear. Because that's what trading's about, guys. You can't be a successful trader and just be like, oh, unicorn farts and chili peppers, whatever. I don't know where that came from. Every day, about everything that happens is all positive. It's not all positive. The market doesn't always just go up. A lot of people learned that the hard way with Bitcoin from the 2017 top through, the next 2 years. Well, really, it was the next year. It's December of the next year when we kind of called that bottom down there and said, I think this is probably it. Let's go ahead and just go and buy, and you should be buying down here at 3,200. Well, people didn't want to listen to us then. People didn't want to listen to me when I said, that top was there in June of 2019. By that time, all of a sudden, retail was starting to get excited about it again, starting to FOMO in again. And I've been off on this move up after 10,000. Yeah, I was off at first. Yeah, I was. But even though I was, it wasn't like I said, hey, listen, you need to sell everything now and just go long. Sell everything now and just go short. We've always continued to look at possible continuations to the upside because no matter what your thought is, guys, on the bigger picture, until it actually happens, you could be wrong. So you need to understand what the possibilities are on that movement up. Our next major area was that 30 to 35,000 area. And then we went through that. And at that point, it goes, okay, well, we're probably not doing that anymore. But it's nowhere along the way did we ever say, listen, this is the top. This is it. You need to sell and get out. We've always talked about, listen, this might be. It needs to do this. If it doesn't do this and it does this other thing instead, then that means we're going to continue on. It's not the top. But most retail traders don't want to listen to that. They just want to pick and choose what they want to hear. You don't want to do that, guys. That's going to get you to lose money all day, every day. All right. What's the point of charting Doge? Is there any indicators predicting what happened in the last couple of months? What's the point in charting Doge? Because it can be charted. It's a pretty clear Elliott Wave count here, coming off the bottom. Here's the start right here. 1, 2, 3, 4, 5. There's 5 up. A, B, C down. There's 3 down. So then you're looking for 5 up again. Yeah, there's things to note here along the way. Now, sometimes they're going to be easier to notice in hindsight. But as this continued pushing up here with the count here, yeah, there's all the reason in the world to chart it. Why wouldn't you? It fits perfectly with accounts. So right now, again, looking at a minimum of about $1 probably. I mean, we've got a minimum target here of 83.7690, but I don't think that's going to stop it. I think it's going to continue up there toward this wave 2 channel resistance up here, closer to our secondary target of that 98.886 or whatever it is right there. So yeah, I think with that. Now, there's also the possibility you could have some, again, some big kickoff that overextends. And in that way, we'll just come back in there and we'll just recount the waves as the subdivision and we'll figure the higher target. But from right here, you should be looking minimum 83.76, most likely 98.88 there. Or dollar, kind of that area. And like I said, if it continues up through that, well, then we just look at that wave 5 is subdividing and then we just map out subdivision to get our better targets. Yeah. That's right. Markets don't care about your thoughts or opinions, guys. It doesn't. The market doesn't care that you're upset or that you're butthurt because Elon Musk, because Elon said that Tesla isn't going to accept payments for Bitcoin anymore. I can't, guys, I've talked about this before. I said, be careful who you're idolizing out there. Saylor, Musk, all these guys. Because at the end of the day, they are not you. They have their own goals and their own things that they're trying to do. All right? And don't think for a second that if anybody says they're not going to sell, that they're not going to sell. Or as Elon's shown, just because they say they're going to start accepting Bitcoin payments doesn't mean they're going to continue accepting Bitcoin payments. Now, do I believe his nonsense about, it's bad for the environment, so we're not going to accept? No. I don't believe that for a second. I think he's got something else he's doing. I think he's got something else he's working on. And then he'll pop up and go, guess what? Bitcoin's okay now because now we've got this way to do it, and it's so much better than it ever was. And now that's what we should be doing. I think that's probably what we'll hear. But for right now, they're not accepting Bitcoin as payment. Again, the nonsense being, it's bad for the environment. I mean, again, if you've ever seen a lithium mine site, it's just absolutely horrendous. Not to mention, again, the electricity that your electric vehicles get to run, where do you think that most of that power comes from? Most of it's not renewable resources. So, it's kind of the pot calling the kettle black here, with Elon saying, it's so bad for the environment. When again, he's, sending rockets into space and, trying to hit some, 6 or 8 million Tesla electric vehicle goal. It just seems kind of silly what he actually said. But, again, retail's in heavy right now. Retail's FOMOing in. So they buy and sell based on what Yahoo's like Elon or other people say. The rest of us out here kind of just say, okay, well, we know that they're going to buy. He said that, so let's go ahead and buy in there and ride it a bit, and then we'll get out because obviously something else is probably going to happen. And not that we know for sure, but just, historically how markets tend to work. Yeah. I don't think Doge was a black swan event either. I think people use the term black swan event way too quickly. Everybody said, it was a black swan event that we had the drop in March of 2021 or 2020. That's such BS, guys. I talked about that 2 years. For 2 years before it happened, I talked about it. Almost to the price point. And then with where we bounced at the bottom there, almost to the price point for the 2 years prior. Everybody says, black swan event. No, it was there. In case you don't believe me, the videos are out there. You can go back and look at it. But, again, guys, I don't think the Doge is a black swan event. It's just something that, that picked up speed as it went up. But, I mean, again, if you're tracking with Elliott Wave here, you've got your movement up here to get your 1. You got your movement here to get your 2, which leads to further movement up. Once you get beyond the 100% and it starts looking like a 3 instead of a C, well, now you're off to the races to get 5. So I'll have to disagree that it's a black swan event. It's just markets being markets when retail FOMO's in. That's all. Those videos are gone forever. Oh, crud, they are, aren't they? Because freaking, oh, God, I hate YouTube, man. Yeah, because those of you that don't know, I actually I've been doing this live since, what, 2018, Hank? Is that when it was? February 2018? And then YouTube closed, they said that I violated it or whatever, and immediately in the middle of a stream, cut me off of YouTube. And it took me months to find an insider who was actually able to go in there, and they said, oh yeah, it looks like they should never have gotten rid of you. It was just a mistake, and then they got me reinstated, but no videos there then. I forgot about that. No, it wasn't 2017. It was 2018 because we started TWC in September of 2017, and then it was that February, I believe, when I first started, and I didn't have video on there or whatever. It's just the charts. And then a few months later, I think I put on the video. Because of Scott Melker, you also, if you get tired of seeing my ugly face here, you can go yell at Scott Melker about that. He's the reason why I do the face in the video and all that now. Heck, he was the reason why I even started doing the videos in the first place. Just so you guys know, I'm not much of one that cares to be in the spotlight a whole lot about things. I usually put my head down and just get the work done. So, yeah, this is all because of Scott. It's his fault. Yeah, that great crypto purge nonsense. Amdu says he's been watching since around June of 2018. Yeah, a little bit after that. Because it was May, it was like right around mid-May of 2018 when I first started talking about what ended up happening in March of 2021. Except I thought that was going to be the top. I did think that was going to be the top. And I figured the first wave down was going to end where it hit. But as you see, we've got this to move up. Now, the other thing is, I do have the charts still on TradingView here. Let me show you guys something here real quick. I've got this one chart here. Let me see if I can find it here for you real quick. Just in case you're maybe new and having trouble believing what I'm saying. It's okay, guys. I understand. It is what it is, you know. It's not always, you know, I wouldn't say to go out there and just believe people right away because they say ABC, right? I think it was a Dow Jones chart, was it maybe? Let me see here. Well, I've got this one. Let me see if this is the one here. Yeah, so I've got this one here from March 29th of 2019. Which I posted there right here. And I was comparing the potential drop that we were looking at to what happened back here in 1987, the stock market crash there, Black Monday. I don't know if any of y'all remember that, if you're old enough to remember that, but huge drop here in the Dow Jones back in 1987, October. And so I was looking at the same kind of play going here, kind of analog here. And so if we play it there, we did get this drop here to the bottom of this channel here. Now, like I said, so here's my target right here. We're just about there. So I thought this was going to be the top and head down here. And this would be like a 1 here at the bottom. And then a 2 and then a 3 as we drop down, right? But what I did then was I had started talking about previously. Let me see here. Yeah, and then I started talking here March 29th, some more there. And then by December 23rd, I finally posted the chart, the alternative that I had been talking about for months prior, which is the idea that we were printing this wave 4 as an expanding. Remember, I told you earlier that expanding triangles don't happen that often? Well, this was the rare case where we're looking at it. So A, B, C, D, E gets that drop, and then that becomes that March 22 kind of thing here. March 2022 with that drop over there. God, 22. God, I keep messing it up. Sorry, guys. March of 2020 here, 2020. Gets that wave E, and that completes the wave 4 here, and then it goes up. So, I mean, it's not like, you know, I'm just telling you guys that I said these things and did these. These are, you know, the proof is there, even if my videos are no longer available from that time. But they are there, so... do with that information what you may. I don't have any reason to lie to you guys. I don't care. I'm not trying. I'm not trying to be some kind of influencer or anything. I've got a whole 27,000 followers now, I think, after all this work I've done. I don't have the time to be an influencer or anything like that. I get up there, I share my thoughts, I talk about the realities of trading, the real things that most people aren't going to talk to you about, because most of the people you're following online have no clue. They're not really traders, guys. Or they're traders in a bull market, which means they're just buying and watching it go up. So hopefully if you're new, you understand that. I think if you've been around a while, you definitely understand that. Yeah. Let me see here. Crypto Raid says he remembers those 2018 streams vividly, literally changed your life. Oh, man, I'm glad to hear that. Hopefully for the better. I'm glad to hear it if it changed your life for the better, man. Let me see here. Yeah, I was bullish until we got that breakdown. Yeah. And then when we got that breakdown, and then we got down to the 30, I said, okay, yeah, this is probably the bottom here, and we're heading up. And of course, everybody's arguing at 4,000, 6,000, and said, no, it's going to continue up there. Called that top then up there at 12, 13,000 in January of 2019. Yeah. But anyway, so yeah. Anyway, so there's Doge. Again, I do with it what you may, guys. I think you've got a minimum target of 83.76, but I think you got a more likely target of 98.88, and potentially some follow through to overextension of wave 5. But I think you should at least be looking for that. So that's almost 45% increase from where we're at the moment. So there's that. Let me see here. What else were we going to talk about here? Stocks we're going to talk about. Oh, Tether. Let's talk about Tether real quick, guys. So Tether. Let me see here. If you guys haven't seen yet, this was the Tether, reported by CoinDesk here. So Tether, they had the lawsuit there by the U.S. here. They lost. So as part of their penance, they have to do all these things, including this quarterly, I think it is, breakdown of their reserves, right, for the next couple of years. So this is basically what they gave, the U.S. here. New York, I believe it is, right? New York Attorney General over there. Let me find it here. Here it is. And so this is actually when so Tether for the longest time until they got to the lawsuit there, until they lost that, they claimed that entire time that they was 100% fully backed by dollars, right? One for one. Every Tether that went out had $1 in reserves, right? And then as we were all following through it, we found out, oh, well, no. All of a sudden they changed real quick. Oh, well, no, it's mostly dollars, 75, 80%. And the rest of it is this other things we have, but they're still really safe, right? And then we get the breakdown now that says, oh, guess what? 49% are cash and cash equivalents, like commercial paper. Now, not all commercial paper is the same grade, guys. Depending on where it's coming from. If it's coming from something like Amazon or Apple or something like that, these huge behemoth, always kind of growing companies, then it's okay, right? You're much more likely, that paper's a lot more likely to be okay. But if that paper is coming from a company not quite so I don't know how to put it here, doing quite so well, that paper is going to be worth a lot less. And that's important because when you're trying to convert that paper into dollars, you need to be able to do so, right? And so if the economy really just kind of, we saw this big, huge move here recently, last few days, right? Beginning of the week, end of last week. And if this is the beginning of a serious move down for the economy, that if it's crappy paper, it's going to be hard to get your dollars out of that. And getting your dollars out of it will probably result in not as great a return as what you were expecting, which means the potential return, the potential reserves is not like what they're saying. Even worse, if their unspecified paper is maybe from Phoenix or something, that would make it unsecured. And so again, unsecured is a huge, huge credit risk, because if that company goes under, what do you have? You got worthless paper. And if if 49% of the reserves for Tether are with crap quality paper like that, what do you think happens? Now, are we far enough along in this whole cryptocurrency market thing so that doesn't actually kill the market? Yeah, I think we may be. But it's going to hurt. If something like that were to happen, it would hurt. Don't make no mistake about it, guys. It would hurt. I think we're far enough along now with all the fiat on-ramps and whatnot, and the institutional participation and whatnot, the size of the market growth and all that. I think we would eventually be okay. But it's going to hurt if something like that were to happen. It would hurt. But I do find it interesting. You would think that in the position they're in, where they have to get this information, if it was good quality paper, they'd be like, yeah, not only is it 49%, but here, you blow it in your face. Ha ha, look at that. This is good quality stuff here. You have no reason to really be concerned. But instead, they just kind of lumped it all together as this unspecified paper. And that, especially with their history, should draw red flags, guys. And this isn't being, anti-Tether or anything. This is being a good business person. They have a history of lying. They have a history of deceit and fraud, basically fraud. What I would think, would generally kind of have the potential to be called fraud. Not that they've been charged as such, but, layman's terms, I guess, maybe. But nonetheless, they've been dishonest, consistently, historically. And their choice here to not expand on that, just to say it's, to just say it's just commercial paper and not really go into it, I think really kind of tips their hat as to the quality of that paper. So we'll see what happens here, but yeah, a very interesting breakdown there for it. You notice only 3.8% of their reserves are cash. That's it. Well, 3.8% of their 75.8% of cash and cash equivalents. So, probably below 3% there, around 3%. That's significant. That's for somebody that just a year and a half ago was saying, oh no, it's all 100% backed by cash, dollar for dollar. That's quite a significant difference there. Tether's growing up. It's almost like a real dollar. Let me see here. Daddy-O says, I don't think Alameda and FTX would be backing them if it wasn't sound, and Bitfinex has been recovering from the hack. Again, I'm not going to say, I don't know anything about Alameda or whatever, but I do know about business in general. And I do know about how people in business tend to act. And so, maybe they don't know how, maybe it is illegitimate, and they don't know just how bad it is that way, because, Tether makes sure that they're taken care of when they're swapping. Maybe they do know, and they're a part of it. I don't know. I'm not saying they do know that. I would never say that, because I don't know. But, I think that's to the same extent. I don't know when you say, well, I don't think they'd be doing it. Well, again, just people in general, especially in finance, in business positions in that higher end finance, they tend to walk a little differently. But don't take this, guys, don't go around saying, oh, Chris is saying this and that. No. I'm just looking at it just in the grand big picture of generalities and things. I have nothing that says that Alameda or anybody are not doing anything legitimately, or that they're in cahoots to pull the wool over your eyes or anything like that. I have nothing out there that says that, and I'm not saying that. But I'm just saying that if you automatically take the position that somebody in that position is necessarily not going to, do things like that, I think that's the wrong position to take. That doesn't mean you assume they're doing it until they prove they're not, but it just means that if you're involved with anything involved with them, that you always have that in mind. Part of being, guys, I talk about risk management all the time. And risk management is more than just the trades that are on your screen. It's more than just your stop loss and all this. What exchanges are you doing? Who's involved? What's the greater picture? All of this is risk. And when you're in the market, you have to take all that into consideration. There was this big argument for a long time that all you needed was this diversified portfolio, right? You got you got different sectors. You got, you've got your clean energy sector, you've got your healthcare sector, you've got your retail sector. And as long as you're doing that, your portfolio is going to be okay, right? Except when the entire market comes down, right? Because the entire market comes down, it's all coming down. You're not diversified. You're concentrated in stocks. And, not a lot of people understood that. Still today, not a lot of people understand that. So, it is what it is, but I think I don't necessarily take the position that anybody that's in those positions are out there with your best interest in mind and doing things exactly as you think it should be done. There's too many gray areas, too many opportunities for them to make extra money, in the way they're doing things. That doesn't mean they are, but it means the opportunity is definitely there. And since you're not going to know whether they are or not for the most part, you just need to understand that risk as you get into that market. That's all. I hope that makes sense. I know some yahoo's going to jump off this stream and start saying, oh man, Alameda, Chris said you were duping people and whatever. It happens all the time. But, I think you guys, for the most part, are smart enough to understand that that isn't what I'm saying here. So, yeah. Which is the best stablecoin to convert my trading earnings instead of Tether? It really depends on what you're looking for. If you don't mind KYC stuff and all that kind of stuff, I think USDC is one of the best, just because it's completely transparent. Audits done all the time, everything else. If you don't like it, I see there's BUSD being mentioned there. That's Bitcoin. Not Bitcoin, Binance. And Binance is the largest trading platform, gives it some support for being probably a good stablecoin, a decent stablecoin. Yes, recently it was noted that Binance is under investigation by the SEC. God, what do you expect, guys? What do you expect? They are the largest platform. I don't think this should be surprising. It shouldn't be considered FUD. It should just be considered a fact of doing business. Recently Kraken was served a John Doe summons, which means that they have to release information on anybody that's in $20,000 worth of crypto transactions in the years that they're looking at, which I believe, I think is 18 and 19. And that's based off that, whatever that was, 2015 or 16 Coinbase case, where the IRS tried to get Coinbase to give information on everybody. And for Coinbase, one of the things that Coinbase has done right there is they fought back. I'm happy to say that. They did fight back. And the judge finally decided that that's too broad, that they had to be at least, it ended up deciding 20,000 or higher, which is how you've got the John Doe summons working right now with Kraken. So, guys, it's just, every time something happens or some kind of news comes out, everybody screams FUD, but that's not what FUD is. If you talk about what's really happening, that's not FUD. That's what's really happening. Again, the whole idea of the Square thing, where Square's not going to take payments anymore. Let me see here. Oops, that's that one. It's right here. So Square's chief financial officer, Amrita Ahua, told Financial News in an interview, "We don't have any plans at this point to make further purchases of Bitcoin." Of course, they mentioned that they lost 20 million. That's 220 million investment last quarter. Again, guys, remember, these companies report quarterlies. So it's not based on, oh, they could just hold in later, it's going to be worth more or anything like that. They, companies that are getting into Bitcoin still find a thin line, guys. Bitcoin is still not really mainstream yet. It's still very, very few people in the grand scheme of things use it or believe it. I talk to people that I know now that still refer to it as magical internet money. They have no clue, and they don't want to have any clue. These are people I know in wealthy areas and highly intelligent and all these other things. So we're not there mainstream yet. So yeah, if these are people that, are okay with stocks though. And if your company is buying all this, Bitcoin, and you take, and you mark a loss on it for that quarter, that's going to affect whether they're going to think about sticking with you or not, or new people that are thinking that same way are going to come in. You guys, you too many times you think that everybody's thinking just like you do, but you spend all this time online in these, basically these echo environments here, with Bitcoin and everything, and how it's the next new thing, and how it's going to change finance, and how it's going to $1 billion or whatever everybody's saying. But most people still don't live in that same world, guys. So just make sure you understand that, okay? And that might help you get an understanding of things like this. It doesn't mean that Jack himself doesn't believe in it. Nowhere in here does it say that Jack's not going to buy anymore, or that Jack's selling or whatever, but just the company itself, the publicly held company. There's a lot more to it. I've been talking to you guys about this for the past year. There's a lot more to it when you're a publicly held company and you're coming into, you're trying to add Bitcoin to your treasury. You have other people to answer to. So yeah. Let's see here. Bill says we are doomed now because Bitcoin made the UK BBC 10 p.m. news last night with the Elon feature. Oh, man. Crazy times, huh? Since the article last night, your friends who have never shown interest in crypto have been contacting you today asking for advice on Bitcoin and crypto. Yeah, I'm having friends do the same thing. I've got friends who are, definitely removed from it, but now they're interested. But oh my gosh, what are they talking about? Doge. It's funny, man. If you're in this space and you know what Doge is, you find this all a bit comical. And I get these friends who are coming in, want me to tell them, what's up with Doge and how to get in and all this stuff. And oh man, it's crazy, right? So good times here. Let me see here. So we can jump on the DXY here. Now, again, we've talked about the fact that we're pretty low, pretty close to this invalidation level down here. So there's unless we're moving up, unless we're getting above right now, we got to break out of here and move above wave B. And that'll give us a little breathing room, a little bit of a idea that maybe the bottom may be in. But until we get above that 94, where is it here? 94,741 up here. It's still possible. This is all, that this up here was maybe like wave 4. And this is, working its way down in 5 waves below that January swing low. Last night, if we are bullish off the low here, then the count should probably look like this here, which gives us a 1 and then an A, B, C is a expanded flat here. And then a 3 and a 4 and a 5. So you've got this leading diagonal kind of thing going on. And then A, B, and then 1, 2, 3, 4, 5 potentially. That ends right there, almost at the 70.5. But we need to see some movement up here. So locally, what are we looking for? On the 1 hour chart here, we need to get above wave 4 of C of 2 here. That'll be the first little clue that this bottom here may be in. Getting above wave B, we're going to add confidence to that, which will take us out of this descending channel, which gives us a pattern target of 1.342 above the point of breakout. And, if depending on when that comes up here, our wave 3 has a local target here, or has a minimum target of 91.784, which gives us a minimum wave 5 of 92.139. And that's pretty close to that pattern target off there. But right now, we need to see some impulsiveness. It might just be local 1-2 here and get ready to break out. But we need to see that impulsiveness. 1 hour, Stochh RSI breaking out of oversold. RSI itself dipped into oversold and broke back out. You can maybe watch the 1 hour resistance here on RSI. I used to talk about this type of thing a lot. Those of you that have been following me for a while know. And I just kind of move around different things, kind of show you guys different ways of looking at things. Let me see here. That'll be the 1 hour. So a breakout of that, and close above it is likely to signal that, the downtrend is done here and we're headed back up. But again, right now, it's too iffy right here to say whether this is the bottom and that the major bottom, the macro was there in January. And then this is a wave 2 bottom here. It's just too early to tell at the moment. It's too close to that invalidation level. So we'll see what happens here. We'll go step by step. First wave 4, break out of the channel, gets us above wave B, which gives us a pattern target, which takes us above wave B, which, builds on itself to add more confidence as this continues up. So, yeah. Snacks, what's up, man? What's my thought on the first clue that the expanded flat for wave 2 is in play? You'll have to tell me what you're talking about, buddy, which chart you're talking about. Let me see here. Yeah, Binance is under investigation. Yeah, with the SEC. Yeah, I mean, that's the SEC. It's not like it's this thing that I think anybody should necessarily be worried about just because the SEC is talking to them. The SEC does this a lot, especially if you're in their position. They are the largest cryptocurrency platform, in the world, right? So the SEC is necessarily going to keep checking on them from time to time to make sure that they aren't allowing U.S. citizens in there because they're not set up with the government here, with the SEC and whatever, to allow U.S. citizens to use it. So yeah, it's just a part of doing business, guys. It doesn't mean, oh my God, they're definitely in trouble or anything. So just remember that, guys, okay? So we'll see what happens with all that. But whether they're just helping or whether it's an investigation or whatever, again, it doesn't mean that they're doing anything wrong. This is part and parcel for what they do. It's just their business. All right? Let me see here. Yeah, helping with investigation into others. Yeah. So, again, guys, because there will be points at which you'll hear that Binance is under investigation. You will find that. Because it's just part of what, with them and what they do and their notoriety and how large they are. The U.S. is going to keep tabs on them, make sure that they're not doing anything they shouldn't be doing, allowing U.S. residents to trade on their platform and whatnot. Okay? So that's what we're talking about there. Let me see here. What else were we looking at? Bitcoin, Doge, Tether, Square. We talked about all that. Stocks. Let's take a look at some stocks, guys. So stocks had a crazy drop, and everybody acting all surprised. But we weren't really surprised, right, guys? And we knew there's some kind of top coming in, right? Talked about it. We knew. Let me see here. So what does the NASDAQ look like now? So my NASDAQ right now, I've got basically as a leading diagonal coming in. So 1, 2 maybe, 3, 4, 5. And then we've got an A, B, C on this breakout here. This is probably a 1, 2, 3, 4, maybe get a 5 up here. First target being the wave 4 area. So that's right there. You can notice that that's right there around the 38.2 retracement of the downtrend. So that gives us our first general target for wave 2. And being that we've got this one up and one back, and we're doing this here, it's probably a pretty good target. So we're going to look and see if we don't get a reversal from around this area and head on down lower. Now I've got this labeled as a 1 here. It could be an A. We aren't confirmed that the top is in here, right? So if it's just okay, so what it would have to be is if we look at the count as it stands here, with this being a 1, 2, 3, 4, 5, then this drop down into wave 1, as deep as it is here, should basically say that this is wave 5, okay? If it continues to drop down below wave 2, that would definitely be a wave 5. But the other possibility is this is all still wave 4 here playing out. This is what I was talking about previously. And maybe this is a flat correction. So this is maybe an ABC, ABC, and then you're getting 5 down, which should target this lower area here, right around 12,300, 12,400 maybe. So it's still possible that's happening. Even if it drops a bit below that wave 4, where I have a wave 4 here, again, this would be A, this would be B. And this just gives us this big trading range right here, as we said right there. And so, you know, in terms of, you know, of Wyckoff, if we're looking at it, you get your buying climax, automatic, if this is going to be reaccumulation, if this is still 4 playing out here, buying climax, selling climax, automatic rally, pullback. You've got this attempt at an upthrust here, which just barely nudges barely a higher high over that, which is most likely going to see price pull down for a dip below the range lows to give it a bit of a spring and head back up in phase C, and then phase D, interior markup, and then phase E, exterior markup, as we go on with the wave 5. In that case, just based on the pattern here, this trading range, wave 5 would at least have a target of probably around 15,948 here on the NASDAQ. But again, if this is wave 4, then this is wave 5 finishing up. And so we're on that last leg, right? Now, the only way we really kind of get some confirmation about whether this is done or not is if we're kind of dropping below wave 2 over here. Because at this point here, this is not going to be some wave 4 thing here. So we've still got a lot of room to go here before we get confirmation that the top's probably in. We'd have to get down here below. Below about 10,519. We'd have to get below that. So even though I have this labeled as a possible top, you know, we're still looking at maybe just you know, if this is 1, 2, 3 down, 1, 2, 3 up, we got 1, 2, 3, 4, 5 maybe still coming down here. Which, by the way, if we're doing that with this right here, I mean, that has the potential to get down here to 11,000. Because if this is a 1 and this is a 2 and we reject here around that 38.2 and come down, let me make sure this isn't set to the log. No, it's not. It's fine. All right, so that gives us a minimum wave 3 down here of around this 11,500 area, minimum wave 5 of 11,063 or so, which does keep us above this area, so we're still good at this potentially being wave 4. I mean, really, it's this one down here, not this one, I'm sorry. It's this swing low down here that you're worried about. So, you know, it still keeps us pretty well above it. Now, my issue with that... now see, we can't really do that though, because if this is 4 and it drops down this low, then you're invading wave 1 here. And if you are, you know, and we're looking at this as being an ending diagonal off the March low here, you know, you'd have to look at that being an ending diagonal if you're going to get in there, which means all of a sudden this has to be an ABC, this has to be an ABC, and then 5 would have to be an ABC. So I would look right now for it to bottom out probably closer here to this swing low right here. You don't want to see it drop below here because then it just complicates. Whoops! Then it just complicates things. If you're getting over here below, what's the high here? 12,074. I think if you're dropping into that, and this is still going to be bullish, I think that complicates the count. So you want to see it do it before that. So again, I would be looking at it being, you know, at it bouncing around here. which would then suggest I don't know, maybe a 1, 2 as we have it here. And then maybe this right here. I was going to say maybe this is a wave 4 flat here. You'd have ABC up and then ABC down, and then you'd have to have 5 up. But it only looks like 3 up, and you don't want it to go into that wave 1 there. Oh, possible. Okay. So if this is going to be wave C of 4, this could potentially be an ending diagonal here. So A, B, C is 1, 2. A, B, C is 3, 4. And you'll get an A, B, C is 5 nearing these lows here. I could see that happening. But I think if you're dropping below wave 4 here, things start leaning probably more toward this being the top. If you're dropping below wave 1, I think, again, it really starts adding into that wave 1, the top idea up here. So, yeah. Let's see here. Yeah, and remember, though, when you're looking at this, if you're looking at this as 1, 2, 3, 4, remember, you're also looking at this as log scale here. So, wave 1 here, wave 3 is a bit shorter. Yeah. So you bring up a good point there. Wave 3 is shorter. So wave 5 just has to be shorter than wave 3. Because, again, as you said, wave 3 can't be the shortest. So, technically, what could we look at here? Technically, wave 5 couldn't get above 16,073 here. What did I say that pattern target was? Pattern target's fine, see? It stops just short of that 1-to-1 there. So in this case, wave 5 would be shorter than wave 3, which is shorter than wave 1, yeah. So it could potentially still go that high up there, the pattern target up there. Yeah. So yeah, we'll continue to watch this going here. I've got this labeled, like I said, at the moment as a top, but watching for how it plays out here. Again, I can see this being a flat correction here, and I can see this maybe being an A, B, C as a 1, and then a 2, A, B, C as a 3, and then a 4, and then A, B, C as a 5 to finish out wave C, and then heading up for 5 more for wave 5. I could see that. But again, once you're dropping under this wave 4 here, it doesn't disqualify it, but I think at that point, your wave 4 is kind of on borrowed time at that point because you don't want to see it drop into wave 1. So, yeah. Let me see here. Lusbeck believes that the last 2 days are a coordinated FUD campaign against crypto as a whole. Just things tend to happen, around the same times, man. I don't know, I don't know. I mean, with what you're saying there, we would have to assume that Elon and Jack and all these people involved are all, calling each other up on phone saying, hey, let's go ahead and do this at this time and put it all together here so we can make the price drop. And again, I don't buy that. I think it just happens. News tends to happen in groupings, or we notice it when it happens in groupings. Otherwise, there's other events that happen, and we go, oh, what? We didn't even know that happened. Again, price action and news happen all day, every day. We just tend to notice it at certain times. And then we say, oh, it's because of this news that price is doing this. When in reality, the news should have been expected because of how people are thinking. Remember, it's all about socioeconomic theory. How are the market participants feeling related to how the overall society and world and everything are feeling? And that gives us this movement of price, which the movement of price just tells us when to expect this stuff, I think, is a better way to look at it. Instead of this stuff causing price to happen, price is letting us know that this stuff is likely to happen around these areas. I've got a link, guys, in the YouTube video here underneath the video for Socioeconomic Theory of Finance. If you haven't read it, guys, I think it's a fantastic read. Again, it's everything that I've kind of put together over the last quarter of a century of doing this, and just found this book here the last couple of years. And the book is by Robert Prechter. But again, everything that the conclusions that I've come to as a trader over all this time are almost completely exactly or very similar to what's in this socioeconomic theory idea. And as a matter of fact, it impressed me so much that I actually joined the Socioeconomic Institute, just because it just amazed me that that there's actually a whole study of thought into this way in which I had come to understand things. So I do that. And I'm working with them. I'm working on my contact over there at EWI, which has the Socioeconomic Institute. I'm actually working with my contact there, trying to get her to get them to give us, sometimes they have these specials that you guys can get free content, and trying to do that to get the information out there. So yeah, I'm working on it, guys. I'm trying to get you some good content here. But if you're not willing to wait for that, I don't get a kickback for you joining, but I think it's a great thing to join if you've got the money to do so. It really is, I think. Let's see here. Hank says Elon is just trying to secure his carbon trading schemes. I think so too. I think it has a lot to do with it, guys. Remember, I've talked about this before. The only way Tesla makes money is because of their carbon trading, the credits that they get and selling them on the market. That and their Bitcoin sales that they did. That was how they made a profit this last quarter. Without those things, just selling cars, they wouldn't have made up. They would have had a loss. The company cannot sell the cars and make money off them. They've got to use all these other things to do it. Now, is that going to change in the future? Maybe. Am I a big fan of Tesla? No, I think there's probably better alternatives out there. Everybody is putting their deposits for the Cybertruck. I put it on the Hummer, in case you guys haven't seen that. It's pretty freaking cool. But they've got a new EV Hummer that they're releasing. So my deposit went to that, not to the silly Cybertruck. The Hummer has better distance, has better horsepower, torque, 0 to 60 faster time. All right, it's negligible, 4.7 versus 4.4, 4.5. Still faster. And I just think a lot better stuff with it. I think, it's got crab walk and all that, which is pretty cool. But anyway, enough of what I'm doing. So, it is what it is, right? I don't know. We'll see how things play out in the end. But I like Hank. I think like him that this is all just part of a bigger carbon play for Tesla, because carbon's big. The carbon market is big money, guys. I talked about this back when they were first talking about doing it, and then when they started doing it, and I had a great many conversations and what do you call them? I don't want to say speeches, but where you talk to groups of people and you give them all the information. I see my brain's completely fried. And you give them all the information about something, these events like that. So, I did a lot of that at the beginning and talked about how it's going to be this huge market, that's going to be more important to a lot of these people who do these other things than what they actually do. And, we're seeing that. So far. So, yeah. Presentations. Bianca, you are my lifesaver. Thank you. Yes. Presentations that I've done back in the day. Oh, man, guys, it's been a long week. I've had a lot of very long nights this week. The tri-motor Cybertruck is under 3 seconds. Okay. I'll have to see what the multi-motor Hummer is. But it's all good. I mean, I like it a lot better. I like the design. I like the interior. The functionality is a lot more up my road, especially living here in Texas, with ranches and stuff. And, things that we do out here. Definitely a lot better than that. So we'll see, right? It seems insane to drive something that big to 60 in under 3 seconds. No kidding, right? Man. Let me see here. All right, so again, looking at Bitcoin here, I think we may be seeing, we're going to see if we get some pullback here. I think we may be seeing a flat correction playing out, which will take us probably back down to this 47,000 area before heading up in B or 3. But as long as it stays above this swing low here in the middle, this, gosh dog it, this 48,886 level, as long as it stays above that and pushes up, this could be 2 done here. But right now we've got 1, 2, 3 down, 1, 2, 3 up. So we'd look for 5 down, potentially do a correction, flat correction there. If we jump out to the daily, again, I did point out the other day that we do have this bullish divergence coming here off this low here, potential bullish SFP right here, over here. In terms of pivots, rejected at the pivot, and even though price dropped through, the body stayed above the S1 pivot, so the S1 pivot held its support. Doge yesterday, so it's a pause, potential reversal. We'll see how today ends. If today can end up higher, this would be great. Gives us follow through, suggests that this is a reversal here and heading up. Stoke RSI dropping down on the daily. Not quite to the bottom yet. It's about 6. So it could follow further there. But again, still having this bullish divergence here on RSI, which I would be more excited about it if it was actually in oversold. But, it is where it is, as it is right now. You can see that moving up in this, we're still looking at this on the larger time frame. If we drop through this 43,020 as that ending diagonal here, and what you'll notice is at every peak here, you got bearish divergence, bearish divergence, bearish divergence. And then finally here, no more bearish divergence. Now, the other way to look at this is we are in a bearish market structure at the moment. We've got a high, a low, a lower high, and a lower low. So we are in a downtrend overall from the top, but a breakout back above this swing high here at about 59,521 would break that market structure, and then we would be looking from the bottom here as a low, a high. Oh, I'm sorry, from here as a low, and then potentially a high there, and kind of start a new bullish market structure potentially. But again, overall, still looking at the triangle here unless this low breaks, in which case then we'll be looking at the wedge and potentially low 30s there on that. Isn't divergence based off the close? Oh my gosh, I get this question so much. Everybody says, okay, well, because of the way that RSI is determined, then shouldn't we be looking at the lows or the close and the opens? And the answer is no, not really. You need to look at where price traveled. Where was their interest during that period? Doesn't matter where it's closed at. The idea is there a change of momentum? That's what you're looking for. And you're not always going to be able to tell that off the candle where they close and open in relation to where you are here. So let's put it this way. If you look at, say, from the close, right? So let's just say we're looking here. Whoops. Let me change this for you guys real quick. I want to show you something real quick here. You're here to learn, right? Let's learn real quick. I don't do this. I always forget where it's at here. Whoops. All right, so what I want to do is I want to get rid of the wicks. All right, there we go. So if we get rid of the wicks here and we just look at the closes, because that's what RSI, right? So you look at this and you go, well, there's no divergence here. Okay? This could be the bottom, but you don't know. There's nothing there saying that it is as far as divergences go, right? Because you're just going by the close. The problem is this doesn't show you what actually happened during the entire period of this candle. Most of your most relevant information, it comes in your wicks. So if you go back in here and you turn on the wick, now all of a sudden you're going from the lows here, and you've got lower lows and you got higher lows here. Now you're saying, okay, possible bullish divergence. Well, yeah, and why is this important? Because momentum came down and then shot back up. Momentum was on the supply side, and then demand momentum took over by the end. That's important because that recognizes this demand momentum rising here. You see this here? If we're coming from the bottom going up, you're measuring demand momentum. You can't tell on just the candles that there's any real change in that momentum there. But you can visually see the change right here. Supply was in control, and by the end of the candle, though, demand won out. This is important to understand because that tells you there's a possibility it's reversing now. Remember, this candle becomes then a potential reversal, at least a pause, because your demand momentum kicked in and took over. It took control from what your supply momentum was doing. But you cannot see that. If you do this, you can't see this right here. All you see is supplies in control. And then you got a little kickback now from some demand. This isn't very convincing. You're missing the information that you need, which shows you that if you take in all the information, all of a sudden, supply is not in control. Demand is clearly in control coming up here now. And that's, again, confirmed by this momentum divergence here. You see that? That's what you're looking at. That's why we do divergences from the lows and the highs, whether they're candle spread or wick. Whatever they are, that's where we're going from. We want to know, we want all that information in that candle. We want to know what's going on. If you don't have your wicks turned on, guys, you have no clue about all this here and this little bit up here. All you see is this little bitty candle spread next to this huge candle spread on this down. Truthfully, you should be thinking, well, we're probably going to go up here a little bit and then head lower. This right here tells us there's a good possibility that this is actually the bottom here and you're heading up. A lot more to be said on that. I get what you're saying, but RSI itself is evaluating closes. Isn't it mismatching data? No. This is the problem that most people have because they don't understand the information that's in the candle. They don't understand the why you want the wicks, why you want to look at these wicks. Remember, when we look at things like price action and volume, you're always looking at the wicks because that's where a significant amount of information comes. Without the wicks here, you can't understand what's going on here. You just see this tiny little candle spread here. You don't understand the gravity of what may be happening here. So you're looking at the momentum here as it's registered with the closes, but you're looking at it versus what fully happened. Okay? It's what fully happened. Not just where price ended up. Because you're looking at that close in relation to what happened. That's how you get the divergence. That's where you're looking for that divergence. It's, okay, well, here's where it says it should have been, but if you look at the candles, it did more. And then you see that the visualization of what actually happened in there. Yeah. So I hope that makes sense. I know if you're not used to price action and volume trading, the wick idea doesn't make a whole lot of sense. But that's what's going on. It's the information that's in the wick. It tells you the full story of what's going on in the candle. The full story is not in the candle spread. Your outlier movements, your wicks, are what's important, really, in relation to the candle spread, which gives you your candlestick structures, right? I mean, for instance, if you look at here and you go, well, there's a hammer candle right there, right? You should already be thinking reversal, right? But if you have the wicks turned off, it's just a little candle spread there. There's no information in that to tell you there might be a reversal or that there's likely going to be a reversal coming off that, right? If you just get the candle spread here and not the upper and bottom, you don't know this is a doji. So you don't know there's at least a pause there and the potential for continuation higher without those wicks. With the wicks, all of a sudden the candlestick has structure now. It shows what's really going on fully, which is why then you go, okay, there's a pause there. We might be reversing here. Yeah. Let me see here. Oh, man. Almost got to go here. What was the Solara one? What were you looking for? Give me the ticker real quick so I don't have to look it up. And then we can look at that there as we move on here, because I've got to get going in a minute here. Let me see here. Doge. Let's make a copy. Sol USDT. Thank you, sir. Yeah, we'll see what we got there real quick. Just trying to keep my charts in order here. Let's see. All right. All right, let's see here. Okay, yeah, it's just going to be maybe there. I'll just check and see if maybe we had a triangle going on here or something. That's interesting. Okay. So just giving us a quick look here. We might have a flat correction here. Let's see. As we go through there. And then see if I can pull another chart up over here for you real quick. Always have trouble trying to use this. All right. All right. So, let's see here. If we look at the weekly here, man, that's a nice bounce off that weekly pivot. Look at that. If you were watching this on the weekly, guys, and you saw this happen, you should have been long. This is a break up through the pivot, rejection at the R1, retest of the pivot, candle closes up like this large lower wick. Man, you should have been, and not only that, but then you've got this large volume here coming off the bottom. Should have been up on that already. But if I look at this, I go 1, 2, 3, 4, 5 potentially here. See here. So that's the first thing I look at. Let's go ahead. Now we zoom in a bit. And we say, okay, yeah, 1, 2 makes sense. It's where I was. 3, 4 potentially, yeah. Again, this isn't going to be a triangle here because you would have an A here and then a B here and then a C and your D would go above, or A, B, yeah, you know, your C would go above. So it's just going to be this right here, which means you've got a new interior wave set here. Probably something along the lines of this right here. 1, 2, 3, 4, 5 maybe. Kind of work this off of this here. I don't know. That could potentially be the top. But it could also just be that this is wave 1 of 5 here. So let's see here. What do we got? If this is just wave 1, And you've got an A, you've got a B. This looks like a flat. It looks like an ABC down, ABC up. And that could be 5 down. Let's zoom in a little bit here. Yeah, it's not an easy call on that. But it is above the daily pivot. So what I would probably look for here, it could either be done, or it could be, like I said, wave 1 here of 5. So what I'm really interested in is, do we get a breakout, an impulsive breakout and continuation up here, or do we get a breakdown here? If we get a continuation up from here, I think this is probably just a 1 and a 2. A very short 2 here. But that would potentially have us going up 5 up here at around 115, if that's the case. They have a 3 up here at about 100. 4 should pull back around 76. 5, 115. And that might do the 5 right there. The breakdown below this pivot, though, then suggests that maybe this is the full 5 here. And in that case, we'd be looking for, you know, usually kind of this 61.8 to the 70.5, so 15.4 to 19.65. But being the fact that the 50% is right around that S1 pivot, that would be my initial wave 2 target on that. So the alternate count would look like this. Sorry, give me a minute here. Well, we'll just go with this count here. Otherwise, this is the top right here. And that would give us a minimum. I would be looking for a minimum wave 2 down here of 25.46, just because that 50% is around wave 4 here, around the S1 pivot. But normally we would look for that 61.8 to that 70.5 to get us right into this activity right here. Whoops. Kind of in that, so you'd be looking for this move down here to bounce out. So if we break down below the pivot, then I would be looking potentially for the S1 here, and then I think it would maybe be a 1-2 heading up. If it continues further, potentially this 70.5 here, it's 15.41, then up. If, however, it just breaks out above the range here, above that swing high, this all-time high over here, then I would assume we're on a 1-2 of 5, and that should get us up here again around whatever I said that was. What was that, 100 and... Oh, doggone it. What did I say that was? 1, 2. Let me see here. Oh, okay, because it's moving, because I'm moving the thing around. Yeah. So 100 for wave 3, potentially 75 for wave 4. And then it's 115 kind of area for wave 5. That's what I'll be looking at. So anyway, guys, man, I have been on here too long. So I hope you guys have a great day. I appreciate you all being here. As always, you know, guys, again, I hope you come back. You know, I'm not, you know, all about pixie dust and unicorn farts and all that here. I'm here to kind of give you a real look at things that are really probably more important to watch and what they could potentially mean. And just because we look at price going down doesn't mean it's the end of the world and everything's over. You know, these are just the realities of trading and how to trade effectively and intelligently, guys. That's all we're trying to do, okay? So I hope you guys get that. And if you do, I hope you share and let other people know about it. We'd love to have more people joining in, more questions and stuff as always. But remember, nothing I say here means that I absolutely know what's going to happen in the market. I don't know. Nobody else knows exactly what's going to do. And if anybody tells you that they guarantee price is going to do something, just walk away, because price will do it or it won't, right? So if it does it, there was always that chance it might do it, and then it's just luck. Nobody knows what's going to happen for sure with price action. Nothing is ever guaranteed in the markets. So the best we can do is understand it and look at where the possibilities are with invalidation and validation levels, proper risk management, and that's how you get to be a trader for a long period of time, guys. All right? I really appreciate you guys being here. Remember, though, all this stuff we look at the end of the day, the only thing you control is how much you lose. That's it. Risk management day in and day out is where you make your money. So make it a habit to learn it and to consistently improve it. That'll give you the best return on your trading account that you can get, okay? And by the way, guys, as I said, if you want to join us, we'd love to have you here. howtotradetowin.com. Join, say hi, introduce yourself. Our members are really, really fantastic group of family to be around. They really are. Y'all have a great weekend. Trade safe, and I'll be back on Tuesday, 11 a.m. Central Standard Time, and we'll see if anything's crazy's happened this weekend, all right? Take care, everybody.